do the 2024. Well, good evening, students. I trust you are well, and welcome to our revision class. It has already started. We just continue. We go through the past tests. I will be recording this on YouTube. Please subscribe. Subscribe to my page. Subscribe. Don't get used to simply watching without contributing. Contribute something, the likes, contribute with subscribe and subscribe as well, so that we continue, so that we grow, so that this page grow and help students as well. And when something is on YouTube, it will always be available. You can revisit it again and again and again when you forget. Unlike on Zoom, where I normally do, sometimes they expire after 30 days, and sometimes I don't have enough space to keep. So that is why I put some on YouTube, especially the most important ones like revisions. You always need them for future reference. Welcome. I'm seeing Sina is in. How are you, Sina? Good. Trust you can all hear me clearly. I trust you can hear me clearly. Hear me. So if you can hear me clearly, if everyone can hear me clearly, I'm more than happy. We are going to go through the 2024 test. 2024 test. If time permits, obviously we can go on and do 2020 2023 tests. So I'm sure the paper is visible, my screen is visible. You can see my Excel spreadsheet. First test for 2024. So that's what we are starting with. Others will join us. I'm sure will join us along the way. And like always, let's discuss. Feel free to ask some questions while we are in class. So here is the question. We are starting from question number 1. And also, before you answer the question, it is very important that you read all the instructions. It's important that you read the instructions from here. The first page can tell you that all amounts exclude VAT unless specifically stated otherwise. All persons mentioned are residents of the Republic of South Africa unless stated otherwise. SARS means South Africa Revenue Services. And all transactions are conducted with registered VAT vendors unless specifically stated otherwise. And valid tax invoices and the required documentation are obtained for all transactions. So this part is very important, especially on assumptions. So you can read, but let's quickly go to our question. Question 1, part A. Question 1, part A. Not part 4, but part A. So let's read what the question is requiring us to do. Discuss the value-added tax consequences of the above-mentioned transactions for Tupac Plastic Private Limited for the 2 months VAT period ending on January 2024. So if the question says discuss VAT consequences, what does the question require us to do? If the question is saying discuss value-added tax consequences, what are you required to do? What are you required to do? So for each transactions, and support your discussion with calculations. Support the transactions indicated in brackets with reference to the relevant section of the Value Tax Act. Provide only the main section reference. The subsections are not required. For example, subsection 10 is sufficient. So when you don't say section 10, comma, subsection so, it's not necessary. So, which is good. The question also on this part, they say you must ignore the time of supply. So yes, if the question is asking you about the VAT implications, just know what are the VAT implications when what happens. For example, if the vendor has sold goods, it means there's output tax implications. If goods are sold, then you can say there's output tax implications. The vendor should raise output tax and pay it to SARS. If goods have been purchased, if the vendor purchased goods in the furtherance of the enterprise, just know that if all factors are constant, input tax must be claimed. Why am I saying if all factors are constant? Because there are some transactions which are exempted. If a transaction is exempted, you have to explain that this transaction is exempted. No value-added tax must be levied. Remember, there are some transactions which are zero-rated. Clearly specify that the transaction is zero-rated. And there are some transactions where input tax is denied. You have to state that here input tax is denied. If it is a deemed supply, state that this is a deemed supply and output tax is levied. So that's what they need you to do. And as well, you have to explain the value of supply, the time of supply on a transaction. If they say validity tax implication. However, in this case, they said we must ignore what? Time of supply. Generally, a time of supply is determined by whether the vendor is registered on invoice basis or on payment basis. If the vendor is registered on invoice basis, the time of supply would be the earliest of what happens first between issuing of an invoice or receiving of payment, or the receiving of invoice or making of payment. That is generally what determines time of supply. But however, in this case, they said ignore time of supply. So let's look at transaction 1. They say the VAT implications. What are the VAT implications, Sina, on transaction number 1?
Output VAT.
There is output VAT.
Mm.
Yes. So let's read the following information regarding the December 2023 to January 2024 VAT period has been provided to you by the tax manager. Miss Michelle Prinsloo, all amounts are inclusive of VAT where applicable unless specifically stated otherwise. Tupi sold a machine that was used in its manufacturing process to Miss Ayob, the majority shareholder, for 85,000 rand. Mr. Ayob is not a registered vendor. The company originally acquired the manufacturing machine for 220,000 on 1 October 2022. Assume that on 31 December 2023, the tax value was 120,000 rand and the open market value was assessed as 95,000 rand. Okay, according to Sina, it says Tapi plastic, Tapi plastic, PTY, LTD should raise output tax, isn't it?
Yes.
On the disposal. On the disposal of machine. Of the machine. On the disposal of the machine to who? To Mr. Ayob. The majority shareholder. That is it. What other factors are you going to look at here? We need to know the value of supply. What is the value of supply? Remember, what we are seeing here, the company sold the machine to Mr. Ayob for 85,000 rand. And the machine was originally acquired for 220,000 rand on 1 October 2022. Assume that on 31 December 2023, the tax value was 120,000 rand and the open market value was 95,000 rand. Which one would be the value of supply to be used?
We're going to use the open market value of 95,000 rand.
Why? Yes, you are right. Why? Why the open market value? Remember, it was sold for 85,000 rand. Why? What is making you to say the open market value? Okay, you are right. Value of supply to connected persons. Value of supply when an asset has been sold to connected person. Let's look at let me look at okay, let me quickly go to the contents. I'm looking, let's go to value of supplies where you determine time of supply, it's right, value of supply to connected persons. We said they said it's which section is just enough. It's section 10. So when a vendor supplies goods to a connected person for no consideration, or for a consideration in money that is less than the open market value, this is our situation. Because the selling price was how much? Let me remove some of the documents here to reduce, yeah. Mm. Yeah, we are here very close to each other. And remember, yeah. So what we have, it was sold for 85,000. Here is the market value, and here is the tax value. So all the three are potential value of supplies. And the question says, just quote the section, the main section. So under section 10, it talks about the value of supply. For consideration, which is less than the open market value. So when you look at how much was it sold for, it was sold for 85,000 rand. And Mr. Ayob is a connected person. A connected person is a relative of the taxpayer or a shareholder. Yeah, the thing is, a shareholder, if somebody is holding more than 20% shares, in this case, he is more like a majority shareholder, making him a connected person. So value of supply, when an asset has been given for a consideration less than the market value, this is the case. It was sold for 85,000 rand, but the market value was 95,000 rand. So the value of supply would be market value. The consideration of the supply is deemed to be its market value, its open market value. To a connected person, for a consideration, or let me say, for a consideration less than market value, or for no consideration at all. Value of supply is the market value. Value of supply is 95,000 rand. Mr. Ayoba is the majority shareholder. As a majority shareholder, that makes him a connected person. Okay, then let's calculate the output tax. So the output tax to be levied is 95,000 rand multiplied by, does the amounts include the VAT? Yeah, market value always include the VAT. If you are using market value, just know that it includes VAT. That is the general rule for tax. As long as it is a market value, it includes VAT. So we multiply by 15 over 115. Welcome, Spongile. Yeah. So if you want to calculate the VAT portion, the portion of VAT on an amount which is including VAT, you must multiply that amount by 15/115. So somebody should do the calculation for me so that we are very quick. I'm getting 12,000.
12,391.
Yes, thanks so much.
391.
191. Thanks so much, Alcina. Yeah. Anything else you feel like we did not cover? Anyone with a question? I'm sure it's clear. The most what they wanted us here is to talk about the value of supply. If an asset has been sold to a connected person, the value of supply is the market value. I'm sure there's nothing else. Let's go to transaction 2.
Silas,
Uh-huh.
so if it was not a connected person, then it would have been the lower.
If it was not a connected person, it would be like a selling price. The selling price.
And then when do we look at the lower of the selling price and the market value?
The low, we look at the lower normally when you buy asset from a non-vendor.
Or when you buy
Things from a non-vendor.
Okay.
Remember, a non-vendor is not going to charge you VAT.
Yeah.
Okay. So the value of supply would be the lower of the purchase price and the open market value.
Okay.
Which will then be limited to the amount paid during the VAT period.
But when you are selling to the non-vendor, you only focus on the selling price.
Yeah, if you are selling to somebody you are not connected to.
You're not connected to.
Okay. It's simply the selling price. Remember, you'll be issuing an invoice.
Yeah. Right.
Transaction 2. A previously used factory building cost 4.2 million was purchased from a non-vendor. The purchase price and transfer duty of 450,000 was paid on 31 January 2024 when the transfer took place into Tapi's name. So what are the tax implications here, Mr. Tabekolo? You can try. Remember, I said when they ask you about the VAT implications, you have to look at whether input tax must be claimed, whether output tax must be levied, whether input tax was denied, if a transaction is exempted.
I think it's a deemed supply.
Is it a deemed supply?
From the non-vendor.
Notional input tax must be claimed. The purchase of the factory building from a non-vendor will result into the taxpayer, into TAPI, claiming notional input tax. It's called notional input tax.
Notional and deemed is not the same.
It's notional or deemed input tax. But if you say deemed supply.
Oh yeah, deemed yeah.
Yeah. No notional input tax or deemed input tax. Mm-hmm. What is the value of supply? What will be the value of supply?
4,606,000, where you
4
add
million.
4.2 million and 150,000.
The value of supply is simply 4.2. Mm-hmm. The purchase price of how much? 4.2 million rand. Mm-hmm. Transfer duty. Transfer duty is another tax. Are you getting me? It's a transfer tax. So you are not going to charge VAT on top of another tax. Are you getting me? No input tax can be claimed from the transfer duty, because transfer duty is another type of tax. They said ignore time of supply, but however, what I can tell you, if time of supply in respect of property, generally is when the property has been transferred, or the earlier of receiving of payment, making of payment, or when the property has been registered. Okay, so let's now calculate input tax that must be claimed. It will be 4.2 million multiplied by, it's from a non-vendor, isn't it? It means the law implies that this amount include VAT. Remember, if you purchase something from a non-vendor, automatically that amount includes VAT, even if the note is saying the amounts are exclusive of VAT. So we must multiply by what? 15 over 115. How much is the amount of input tax that must be claimed? R547,826. Any part which we feel like we have touched on transfer duty, which is very material. We've touched on the purchase price, which is very material. In this notional input tax, we touched it. Let's go to transaction 3. On 1 December 2023, a new motor car was acquired for 650,000 rand. The use of the motor car was immediately assigned to 2PC marketing manager. the purchase of the motor car was facilitated through an installment credit agreement. This agreement required an upfront deposit of 30,000 rand due on 1 January 2024, followed by 22 monthly installments of 10,500 rand. So what are the VAT implications? What are the VAT implications? Remember I said input tax is denied, you have to state that the input tax has been denied. If input tax should be claimed, you have to state that input tax is claimable. What are the implications here, Mr. Tsabekulu? What are the implications?
The purchase of a motor car is input tax denied as defined, as a motor car is defined.
No input tax. Input tax is denied. Input tax is denied on the purchase of the motor car. So the vendor TAPI will not be able to claim input tax. On the purchase of a motor car. Remember what a motor car is. So a motor car, it's a vehicle that is designed to carry passengers. A motor car, it's a vehicle designed to carry passengers 2 and above, but not more than 16. So this is a motor car. Input tax cannot be claimed. Yes, it was purchased during the VAT period to be used by the marketing manager for trade, but however, input tax is denied on the purchase of a motor car. Another implications, let's go to the transaction, because each statement is very important here. What about the use of the motor car was immediately assigned to TAPI manager? What are the implications?
When the fringe benefit, which
yes,
is the output tax.
Yes, granting of the motor vehicle to the manager, the marketing manager, Is it the marketing manager? The marketing manager will be a taxable fringe benefit. Fringe benefit. So here, what is the value of supply of the motor? What is the value of which must be taken into consideration? Remember, it was purchased for 650,000 rand. But as far as we were concerned, it was payable in installment. So what will be the value of supply?
The invoice amount.
Yes, because the vendor is registered on invoice basis. So the value to be taken into account is the purchase price. Which is equal to how much? 650,000 rand. Okay. Then what is the value of the fringe benefit? I left like it's a taxable by fringe benefit. Output tax must be raised. Output tax.
Okay, let me try it. It could be 650 and multiplied by 100 over 115.
So let's calculate output tax.
The determined amount.
It's going to 650,000 rand multiplied by 100 over 115. Why should we multiply by 100 over 115?
Because the amount is inclusive of that.
Yes. Remember, you want to get the determined value. Determined value must be cost excluding VAT. So when you multiply by 100 over 115, we actually want to get the purchase price excluding VAT. What is the next stage? Is to calculate the cash equivalent, isn't it?
Yeah.
So the cash equivalent is 0.6% per month if it is if input tax was claimed. If input tax was denied on the purchase of such a vehicle, then the cash equivalent would be 0.3% per month. It's clear, we've just done the calculation and we said that input tax is denied. So we are going to use 0.3% per month. Not 3%, but 0.3% per month. Who was responsible for maintenance and fuel? It was not said, meaning the responsibility was on the company. And then we obviously multiply by the VAT fraction 15 over 115. And then we multiply by how many months are they on 1 December? That's when it was granted. So we multiply by 2 and multiply by 100%, isn't it? So 100% is the percentage of taxable supply. So the percentage of taxable supply is 100%. So we must multiply by 100%. So if the percentage of taxable supplies was 60%, then we will also multiply by 60%. So how much output tax must be raised? Svongile, how much output tax must be raised when you calculate here? It's 650,000 rand multiplied by 100 over 115. Multiplied by 0.3%. And then multiply by 15 over 115. Am I right? Let's make 650,000 multiplied by 100 over 115.
442.
542. And then multiply by 0.3%. Then we get 1,696. and multiply by 15 over 115, then we've got 221. Multiply by 2, 442. Multiply by 100%, then we are going to get 442 rand. Yes, that is the output tax that must be raised as a result of granting the motor vehicle to the marketing director. First of all, just take note of how you calculate this portion. You want to get determined value. The determined value, it's cost excluding VAT. When you multiply by 100 over 115, you are getting cost excluding VAT. Then later on, after getting the determined value, you get the cash equivalent per month. So the cash equivalent is 0.3% if input tax was denied, or 0.6% per month if input tax was claimed. However, we said this is a motor car and input tax was denied. That is why we used 0.3%. Multiply by 15 over 115, which is the VAT fraction. Multiply by 2. Remember, I said the 0.3 is cash equivalent per month. Then you have to say, okay, how many months was the vehicle used during the VAT period? It's 2 months from December and January. And then multiply by 100%. 100% is the percentage of taxable use, which is 100%. When you do like this, you have collected all the marks. Any question? Any other question? Any question? Any question? I'm sure you are fine. Let's go to transaction 4. So on 31 December 2023, equipment with a selling price of 230,000 excluding VAT was sold to a customer in Zimbabwe. The equipment was consigned and delivered by TAPI to the customer's factory in Zimbabwe. What are the VAT implications?
It's an export. Then they are charged zero.
Selling of what? Of the equipment. To Zimbabwe is an export transaction, isn't it? What are the tax implications of an export? No output tax is raised. Why? Because exports is a zero-rated supply. Which section is this? Is it not section 11 or 12? Let me verify. Yeah, section 11. I'm right, section 11. So we are done with the section, with the transaction 4. Yeah, export, it's section 11. Exempted supply, it's section 12. Transaction 5. On 15 December 2023, the company experienced a robbery at its premises, resulting in the theft of a delivery vehicle valued at 175,000 rand. The insurance company compensated them with a cash reimbursement of 150,000 rand. What are the VAT implications here? Anyone wants to try, Sina? Or this time around, Masemula?
Good evening. It's output VAT.
It's output VAT.
Yeah.
Output VAT must be raised. This is a deemed supply, isn't it? Yes, this is a deemed supply. An indemnity payment received is a deemed supply. And the output tax should be raised. Remember, it's a deemed supply is if payment has been received in cash form. So how much is the output tax? It's 150,000 rand multiplied by 15 over 100 because they say the amount exclude VAT. So how much is the output tax to be raised?
$22,500.
Yes, 22,500 rand. Okay. Thanks so much. Thanks so much. I'm sure we are done with the first part. We are done with the first part of the question. Any question before we move on? So when they say discuss the VAT implications, that's what you should do. State if input tax is denied, state if something is exempted. The secret, please know, I'm sure you all have my notes. Just memorize those transactions which are exempted, transactions which are zero rated, transactions where input tax is denied. Half a job is done. You should not struggle with VAT. Should we do part B? Yes, we should. I think we should quickly do. Last week we did journals, and this part is on journals, journal entries. We said there is DR and CR. Tapi sold 150 boxes of Tupperware to All Stores Limited, one of its local customers situated in Limpopo. The selling price of a box of Tupperware includes 5 different types of Tupperware, and each box is sold for 350 Rand. What are the tax implications here? When you sell goods, it means output tax should be levied. They said all amounts are inclusive of VAT, meaning 350 Rand includes VAT. Okay, so was it sold in cash or credit? We assume it's a cash sale. Which transaction is debited and which transaction is credited? It's bank, isn't it? Bank is debited, it's an asset. If you sell goods, bank would increase. An asset increase on the other side. So how much is going to be put into the bank?
$52,500.
So must multiply by 150 multiplied by 350, isn't it?
Yes.
And then how much did you get?
I get 52,500.
Which transaction, which account is credited? Remember, which transaction include on the credit side? The sales, isn't it? Yeah, income is sales. Then we say sales of Tupperware boxes. So what we have, remember, output tax must be shown on its own. Remember, output tax has got a credit entry. So we are going to say 150,000, 150 Rand. Not 100, not 150 Rand, 150 boxes, sorry. Multiply by 350. If it includes VAT, you want to get amount excluding VAT, isn't it? How do you get amount excluding VAT? You multiply by 100 over 115. Then you are going to get sales excluding VAT, which are going to be posted into profit or loss account, isn't it? Multiply by 100 over 115. So it's going to be 45,652 Rand. These are sales. Then output takes the VAT control account. Which is output tax or output VAT. It's going to be okay. This one is 52,500. 52,500. Sorry. So we simply say 52,500 multiply by 15 over 115. I'm getting how much? 6,848. 8,040. 6,848. Yeah. So if you add these two together, you get 52,500. And the debit side and the credit side balances. Okay. Then you write the note, output tax levied on the sale, on sales of Tupperware. Then you are done. Then we go on to transaction number 2. On 1 March 2024, 12,500 per month was paid for a 2-bedroom flat. The flat is provided free of charge to Cindy Nkomo, the secretary of the tax manager, for a personal use. Which transaction do we have here? There's a rental expense, isn't it? And the bank is losing money because the vendor is paying, isn't it? So the bank is credited, the expense account is debited. So we start with the rental. Which is a expense account. Remember the implications on accounting. When you are doing your trial balance, expense has got a debit ending, increases on the debit side. So yes, so how much rental was paid? Which period are we talking about? It's February, March. It's 2 months. So it was only entered into, it's only 1 month. So we are talking about 12,000 Rand only. 12,000 Rand. What is credited? It's an expense, however. What is the... Remember, generally expense, we know that expense has got input tax implications. So what is the VAT control account? Input VAT. We know that if you are paying rental, what are the implications on rental on a residential accommodation?
Exempt.
Yes. So it's an exempted supply. It means no VAT is payable. Exempt. So meaning there is zero input tax claimable. Which account is credited? It's the bank. The bank is going to lose money. The bank is losing how much? 12,000 Rand. Then let's go on to Tupperware, purchased large quantities of raw material from Plastic Galore and was billed for a purchase at the end of each month. TAPI settles the full amount due within 30 days after billing. The amounts TAPI settled of February and March were 120 and 95,000 respectively. Both amounts exclude VAT. Which two accounts are we talking about? Remember, when you are doing journal entries, we need to be quick to pick the accounts which are affected. Raw material, it's an asset account, isn't it? Or a consumables account. Which is an asset account, meaning it's a DR. Which account loses money? Which account should be credited? Depending if there were cash purchases. If there were cash purchases, we know that the bank is credited. But if there were credit purchases, meaning it's a liability, and the liability increases on the CR side as well. So that is the case that we are going to have here. So okay, raw material purchased. Which is simply 120,000 plus 95,000 rand. How much altogether? $115,000. So they said the amount includes VAT or exclude VAT? Exclude VAT. Remember, when you purchase, you are entitled to claim input tax. So look at the VAT control account. So if the amount exclude VAT, how much is the VAT? If the amount is excluding VAT, for you to be able to get the VAT portion, you simply multiply by what? 15 over 100. So how much is 15% of 250,000 rand?
Yes. 32,250.
Yes. Which account is credited? Yeah. Let's assume like it's cash purchases because they said it's not credit sales because amounts were paid already. So it's the bank. It's the bank account which is going to decrease by purchases which have been done.
Is it not trade payable?
They said they settled amounts type settled for February and March.
Or within 30 days?
Yes, so it means it's cash.
Okay.
Which is the bank. Remember, the amount here must be including VAT. We will simply say 215,000 multiplied by 115 over 100. You get amount including VAT. You see how I played with my mathematics. So it's 215,000 multiplied by 115 over 100. You would see it's 247,250 rand. Okay, you can see it's equal to, when you do this, 247,250. It's exactly, it balances. Then we've got input tax. on the purchase of raw materials. The last transaction, we see that on 1 March 2024, TAPI paid 16,000 to a local station for the fuel used by the delivery vehicle. Then two accounts here. There's the expense account, which is on fuel, and there's a bank, which is going to lose money. Those are the two accounts we are talking about here. So we start with the fuel. It's 16,000 rand.
Mr. Madondo, I think you skipped transaction number 4.
Oh,
I wanted to go. Okay, let's go back to transaction number 4. Then let's do the VAT control account. Fuel is 0 rated. No input tax. There's no input tax. The transaction which we will lose is the bank. The bank will be reduced by 16,000 rand. Then we go to that transaction. After experiencing several break-ins and theft from its warehouse, the company enhanced the security measures by engaging a security company. Security guards now patrol the premises each evening. The total cost of this service over 2 months amounted to 8,000. Remember, the security here, it's a service that has been paid. It's not like the employees. If they were employees for TAPI, we're going to say not an enterprise. But in this case, TAPI is paying a security company, which is also a registered vendor, according to some instructions where we say just assume that all amounts are being paid to registered vendors. So it's an expense. Security services. Including VAT. So it's an expense. An expense has got input tax implications. So we are going to say, what is the total cost of this service over the 2 months? It's 8,000 rand. 8,000 rand multiplied by 100 over 115. Remember, this is the DR, this is the input tax side. So the first line, which is an expense, the expense which is going to be posted in the profit or loss account must be excluding VAT. So when I multiply by 100 over 115, I'm actually excluding VAT from 80,000 because I want that line to be posted directly into the profit or loss account when you are determining the statement of comprehensive income. How much is the amount which must be posted there in the profit or loss account? I'm getting 6,857 rand. Then let's look at the VAT control account. The VAT control account is clear. Okay, I can say 8,000 rand. multiply by 15 over 115. How much do we have? R1,043. Which account is credited? I said the ones you are paying, the bank decreases, and the bank decreases on the credit side, of which we take the 8,000 rand. That is it. Input tax claimable on the security services. Expenditure. Okay, we are done. Anyone with a question? Any question? I'm sure with the journals you are all fine. You are all good with the journals now.
Provocation from foreigners to say.
Yeah, I think it's fair enough.
Yeah, the Mr. Madondo, the calculation on the service on the security services seems incorrect, but I get the concept.
It seems to be incorrect. Okay. Okay, it's incorrect. What should I have done? It's now 7,000. Yeah, maybe.
Should be 6957.
It's 6,957, eh? 6,957 like this.
Yes.
Okay. Yes, now it's fine. Okay, thanks so much. If you are fine and if you are happy, I'm also happy. Let's quickly look at part C before I end the class. Part C. Looks like they looked into general deduction formula. Even though they told us like it's gross income. But however, they just said you did this in when you were doing tax3761. And that's what they do. Even when you do CTA, when you do a postgrad, when you feel like you are only going to be tested on that, then they bring income tax implications and say you did it when you were doing the third year. Here is say write a memo to Nelisi Wechaba discussing whether the entertainment expenses will be deductible by TAPI Plastic. So a memo is used for internal communication. Is used for internal communication. So Mr. Nelisi Wechaba, CEO of TAPI, engages extensively with independent contractors to facilitate the sales of Tupperware products. So given the nature of the business and the significant portion of TAPI's income derived through these contractors, entertainment expenses represented a substantial portion of the company's expenditure. Mr. Chaba frequently treats them to business lunches, among others, with the entertainment expenses totaling 45,000 for the 2024 year of assessment, broken down as follows. 35,000 rand, and then 6,000 Chaba's personal clothing. The pedal tennis club subscription fees, part of the contractor's remuneration package, and so on. So write a memo discussing whether the entertainment expenses will be deductible by TAPI Plastic during the 2024 year of assessment. in terms of the general deduction formula. So the general deduction formula, you simply apply this framework like, okay, a taxpayer will get a deduction if he is carrying on a trade. If he is carrying on a trade. That is the first question. And what is deductible? It's expenditure or loss that have been actually incurred during the year of assessment and in the production of income, and excluding expenditure or losses of capital nature. So since we haven't touched this topic, I will record it personally and post it, but that is the general. But for now, let's just brief, and then I'll write it and record it properly as we go, because I wanted to get into introduce you all the concepts of the general deduction formula on what you must do. So generally, you look at the expenses. Was they incurred by the taxpayer? Was they in the production of income? Then you have got Mrs. personal clothing. Then you can see this one is a private expense according to section 23. Section 23 prohibits the deduction of private expenses or domestic expenditures. So 40,000 is 4,000 is prohibited. So let's look at the lunches. Let's look at the paid or tennis subscriptions. We are moving away from value-added tax. You end up saying subscriptions are input tax is denied. But now we are in income. So you have to look at, okay, what are the subscriptions for? So however, I will record this for now. I don't want it to overload you. I will see by tomorrow I can make up a short video. And then I'll post to you so that if they bring the general deduction formula, that you don't struggle. So any question you might have regarding the value regarding VAT today? I'm sure you are all fine. Thanks so much for attending class. So please subscribe to my YouTube. I posted a few classes there, although it's not everything. But here and there, I would post. The last time I posted when I started gross income. The past 4 or 5 classes I did not, but this one I'm going to post. To my viewers there, please subscribe. Don't enjoy things for free. Yeah, at least as you go through my classes, the least you can do to support me is to subscribe and also forward it to your friends there so that they can also subscribe and also benefit. And also, I'm welcome for questions, please. You can come if you can come to join our class. The classes are still open. You can still join. You don't fail this module. After this test, we are going to go through income tax for companies, and then that will be tested too. It's going to be hectic as we go. Anyway, thanks so much. Have a nice evening. Bye.